Welcome back to the Daily Stack. Today, it's August 23rd, 2025. This is not financial advice. Unless you consider don't FOMO into a cat-themed coin at 3 a.m. financial advice. In that case, I just saved you a therapy bill.
Digits flipping, crypto spinning, watch it grow. From the basement blind to the blockchain glow. Chasing that ether, not the gas, you know. Dreams encrypted, moving fast, never slow.
Well, the Fed just did it again. Jerome Powell stepped onto the Jackson Hole stage, whispered sweet nothings about possible rate cuts in September, and the crypto market melted up like butter on a skillet. Bitcoin ripped back towards 114,000. Global crypto market cap hit 4.13 trillion, and daily volume surged over 218 billion with a B. That's a full-blown stampede. But Ethereum stole the spotlight. ETH went full heavyweight mode with a 13% rally, outpacing Bitcoin and giving trader flashbacks to when it was the king of DeFi summer. Some are calling it the moment Ethereum stops being the sidekick and starts running the cycle. Here's the plot twist. While retail was busy celebrating, the big boys were quietly walking out the back door. US spot ETFs saw 1.17 billion in outflows, their longest stretch of redemptions in 4 months. Translation: retail bought the pump. Institutions sold the pump. Nothing new under the sun, basically. Meanwhile, XRP lagged again. Its supply and profit dropped, more bag holders slid underwater, and community is coping with the usual combo of memes and copium. Now let's slide over to the meme coin mayhem. The Powell pump spilled straight into meme coin land, because of course it did. On Solana, the zoo went nuts. Dog coins, cat coins, every whiff hat derivative, and all caught fresh inflows after the Van Eck ETF news. Retail loves nothing more than mixing Powell said cuts with send me a raccoon coin. Ethereum-based meme coins got sympathy volume too. Pepe, Wojak, even the tiny tokens that were basically illiquid last week suddenly had liquidity pools looking alive again. Discords that were ghost towns 2 weeks ago, now they're packed like Vegas blackjack tables on payday. The narrative of the day is re-stake to the moon. Everyone suddenly thinks they're running a hedge fund by stacking 3 layers of yield on top of staked ETH. Spoiler alert, perpetual motion doesn't exist, and if it did, it wouldn't be built on solidity. But hey, for now, the vibes are euphoric. And in institutional and regulatory spotlight, this is where things get pretty interesting. Van Eck just filed for a Solana staking ETF. Not just vanilla Solana exposure, but Jito Sol. That means stake Solana with rewards baked in. If this gets approved, TradFi investors will be yield farming without even knowing it. Your grandpa could open his Fidelity account, buy a safe ETF, and boom, he's farming Solana like a degen. And Europe isn't sitting still. After the US passed the Genius Act for stablecoins, the EU went into overdrive on its digital euro project. Policymakers are openly considering Ethereum and Solana as infrastructure. Imagine central bank settlement running on the same chain where you can mint a Pepe but with sunglasses NFT. The irony is pretty thick, but the money, it's real. This isn't about whether crypto survives anymore. This is about which chains governments choose to build on. That's the battlefront now. And as far as on-chain signals go, Ethereum's restaking boom today is the headline act. Validators are staking their staked ETH into new protocols to earn multiple yield layers. It's like DeFi Jenga. Looks brilliant until gravity decides to test your hand. Triple the returns, triple the risk. But for now, fueling demand for Ethereum and boosting the price momentum. Bitcoin, however, is feeling pressure. Its supply in profit metric is declining, meaning fewer coins above their cost basis. That puts stress on weaker hands and sets up key levels to watch. 112,000, 110.8 as support, with 113.8 and 115.5 acting as resistance. If Bitcoin clears the upside, it could reclaim momentum fast. Fail, and we're staring at a deeper pullback. XRP finds itself in the same boat as Bitcoin. More holders underwater, less margin for error. And speaking about Bitcoin taking a hit, here's another signal flashing on the dashboards right now. And it's not just Powell or the ETF flows. It's Bitcoin dominance. Bitcoin dominance just slipped below the 59% mark. That's historically the line where things start to get interesting for alts. Or you might have heard it called alt season, the capital rotation. And we've seen this movie before. The last time Bitcoin dominance lost that 59% mark was back in late 2021. That's right before Ethereum ripped towards its all-time high and Solana went from under $40 to over $200 in a matter of weeks. Meme coins weren't just pumping. They were setting the cultural tone for the whole cycle. Pepe and Doge basically turned into macro indicators. Now, don't get it twisted. Alt season doesn't mean every random token goes 10x overnight. What it does mean is traders start shifting risk away from Bitcoin into Ethereum, Solana, and yes, even into meme coin land. With Ethereum already flexing a 13% rally and Solana grabbing ETF headlines, the timing lines up. If Bitcoin can hold above support while dominance stays under 59%, that's the perfect storm. Bitcoin stabilizes, ETH and Sol pump, and meme coins ride shotgun. That's the market's way of saying, thanks for playing Bitcoin. Now let's spin the wheel of degeneracy. Ethereum looks structurally strong. Powell lit the match. Restaking threw on gasoline, and Ethereum is the one standing tall. Let's talk about what communities are buzzing, because sometimes the alpha isn't in the charts, it's in the memes. On Solana, the hype around potential ETF has everyone predicting a fresh meme coin season. People are already rotating into dog coins and new launches, betting that retail traders will follow liquidity into anything with Solana in the ticker. If you thought the zoo was crowded before, wait until mainstream headlines start saying Solana ETF. Ethereum's community is split between two narratives. The restaking crowd, who are treating the eigenlayer and friends like they're printing money, and the Ethereum maxis, who are screaming that it's all going to blow up. Expect this debate to dominate CT for weeks. Yield hunters versus doomsayers. And then there's the meme coin degens. Pepe shills are staging Twitter raids again, Wojak community is chanting back from the dead, and smaller communities like Brett and Layer 6900 are hyping September as the month they decouple. Spoiler, most of them won't. But watching the optimism is part of the show. Community sentiment is hot, but when the sentiment is hot, liquidity usually isn't far behind. That's your early warning system. Which brings me to the tip of the day. Always separate hype from flow. Communities can scream all they want, but if there's no liquidity following, the hype dies quick. Powell's speech pumped liquidity back into risk markets, which is why meme coin chatter mattered today. But don't confuse memes for momentum. Always confront volume and flow. So here's the stack. Powell teased raise cuts, markets ripped, Bitcoin ETFs leaked billions, Ethereum flexed both price action and restaking mania. Van Eck wants to turn Solana into an ETF, Europe wants a digital euro, and retail wants to believe that free yield is real. Communities are back in full swing, and the next few weeks could feel a lot more like 2021 than 2024. The game is fast, the moves are big, and the only constant is change. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily, and I'll see you degens tomorrow.
With the hustle stacked like Lego towers, wallets fatting up, counting digital flowers. Late nights coding while the market devours. Every second's gold, times the rarest of powers.